This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on February 19th, 2016. Our time is 8:40 Mountain. Radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. A radio show is also archived on Harold's two websites. If you ever miss a show, find us at HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. You'll find us there. We are portable. We go on your portable device anywhere you do. Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com, 1-800-432-1022, our featured diamond of the week. And we have a featured diamond for every show. You can see it. Rarecoloreddiamonds.com, featured diamond of the week. It's a 1.19 carat cushion cut, fancy, vivid orange, yellow, internally flawless. This is the rarest of the rare, and we'll talk about it in the second half of the show. Harold was telling me before the show that it is very, very difficult to find a diamond of this quality and the color. One of the top stories, and of course it was a holiday week. We had on Monday, Family Day in Alberta, President's Day in the United States, other holidays across Canada. Iran backs oil producer freeze without pledge supplying curbs. Now they say Iran supported an accord by Saudi Arabia and Russia to steady global oil markets by capping their supply without saying whether it would curb its own production. And that was the problem. Everyone was quite excited hearing the news, and then they realized that what we need is cuts in the amount of oil that's being produced, not something along the lines of basically a curb, an amount cut at where we are right now. Harold, obviously oil as a result has been trading within a range, and we're seeing record low gasoline prices across Canada in the United States. People enjoying the fact that at the pump they're getting some relief. But if you have an economy, as Canada is, so dependent on oil and gasoline, natural gas, and of course gas, you're in a situation where we're feeling a lot of pain. And I'm surprised that some of the OPEC countries and Iran and obviously Saudi Arabia and Russia have not gotten together and done some cuts, because they could raise the price of oil, make a little extra money, and I think that would help a lot of the economies of the world very, very dramatically.
You're 100% right, Randy, but that's not going to happen, because in the 35 years that I've traded oil, I've never seen these guys get along. They cheat all of the time. They're only into this for themselves. So when the news came out during the week, it was very bullish. The price of oil went from $26, actually hit $25 as a low, and went all the way up to $32. However, obviously this is not an exciting situation for the market, and everybody that knows oil read into this in the right way, and now oil is down $1.50 today. It's down 5%, and we're back down below 30. We're at $29.37. I've said this for the last several months. There's oil being sold in the Middle East for $20 a barrel. That's why we're confident that the price of oil could touch $20. So the fact is that do we need any more pain in Canada? Of course not. But the fact is that you're better off knowing what's going to happen in advance so you can plan for it and deal with it and accept it and then move on from there. So the fact is that we have no control over the markets. All we can do is read them, analyze them, and let our clients and listeners know what we feel is going to happen. We've been extremely accurate. You know, the fact is that we're in a very tight range at this point here. When oil was at when gold was at $13.50, we started our prediction that gold was going to come down to $1,000. Most people never thought that would happen, but gold came down to $1,050 within $50 of our prediction. Do we think that that's over? No, we do believe that gold is going to go to $1,000. The fact is that gold is going to go to $1,000, but I would never want to be out of the gold market, because we saw what happened over the last few weeks with gold. You know, when there's a panic in the banking markets and things like that, and China got into some trouble and all this negative news started coming out, you saw gold go from $1,050 to $12.50 in a very short period of time. The fact is the U.S. dollar came down about 3 or 4 cents, but that was not enough for gold to go up $200. So basically, there's a fear factor in gold. And when the world starts getting into these frightening situations financially, that's when gold is going to start to take off. But again, there's other things that I look at aside from the emotion of gold trading higher. I look at the Commitment of Traders report, for example, and there's still a very large short position in gold. And knowing that the commercials and the banks that are trading gold, they don't trade on fundamentals. They don't trade on technicals. They just make the market do what they want it to do. So I'm still convinced that we're going to see gold retrace and come down to the $1,000 level, but I highly doubt it's going to go lower than that. So the fact is that we now know that we're within a couple $100 of the low of the market, and that's a good thing. We've also seen that what gold is capable of doing. We saw a day last week where gold went up $60 in one day, and then we saw the next day when the market went down $30 in the day. So, the fact is when these markets get as volatile as they do, it's not a good situation. Unless you're an expert trader and you're trading gold, you're going to lose your money. 90% of the people that trade stocks and commodities don't know what they're doing, and they ultimately end up losing their money. We always say, don't trade gold, own it. Buy it and hold it, because you never know when you're going to wake up in the morning what gold is going to do. And with everything happening in the world right now that is so detrimental to the world financial market stabilizing, the fact is gold is an amazing investment. However, for those of us that are looking to bottom pick the market, I do believe the gold is going to go lower. I believe it is going to hit right around that $1,000 level, but I do also believe over the intermediate term that we're going to see gold above $2,000. So the fact is that gold is an amazing investment, but it's not something that you want to trade in and out of the market. You want to buy it, hold it, own it outright. Don't leverage it, don't finance it. Own that gold outright, because it's going to be extremely important moving forward as we find more and more about the cashless society, how gold is really going to fit into that situation. Now, we were talking about oil. The fact is that oil has been extremely volatile. We saw oil go all the way down. When we first started talking about shorting oil, it was in the $40 range, $35, $40 range. We felt that because of everything happening in the Middle East, and unfortunately how it was affecting Canada, we knew that the price of oil was going to come down. It came all the way down to around $25. At $25, there's not an oil-producing nation that makes any money in oil at $25. In fact, everybody's losing money. There are many oil-producing nations, even OPEC members, that are basically almost bankrupt at this point and can't produce. Just look at Fort McMurray, what's happening up there. It's like a ghost town at this point. So we really need to sit back, not be emotional about the markets, and understand why the markets are doing what they're doing, and try to analyze where the markets are going to go to, so we have a much clearer understanding as to what we need to do, whether we need to be aggressive or conservative, whether we need to get into the market now or sit back and wait for it to retrace. So the fact is, if you own physical gold, I would hold it. I would never look at selling it, even though we're looking that gold could possibly fall back down, to the $1,000 level. I would never, ever sell gold at this point, because we don't know what's happening in other parts of the world. If China continues to deteriorate and the banks continue to get into a bad situation, and all of a sudden we find that the shorts that are in the market are reversing their position, you need to be in gold at that point. We could see days where gold could go up $100 in a day. So again, if you own physical gold and silver, hold it. Do not sell it, because, again, we don't want to trade that market. We want to own it and we want to hold it, because there is no doubt in my mind that we are going to see gold prices eventually. With everything going on in the world, I believe gold is going to be a $3,000, $4,000, $5,000 metal. I think that silver, if it's ever going to break above 50 and can close above 50, then we have a shot at seeing $75 to $100 silver. There are also shortages physically in both of those markets, which is going to help us moving forward. So just to give you a short-term analysis of where we see the markets going at this particular point, but again, understand this is a short-term scenario, and this could change at any given time. First of all, the Dow is extremely volatile, so is the TSX. stay out of that market. If you've got your money sitting in paper stocks, bonds, and paper assets like that, you're going to get killed in this market. You do not need to be in the stock markets or mutual funds or anything right now. In fact, if the markets continue the way that they are, your retirement savings plans are going to get decimated. You're much better off doing nothing, just sitting on the sideline, selling your position, sitting on the sideline and waiting. Don't forget what happened in 2008 when the Dow dropped from 14,000 to 6,500. Those that got out early and sat back and let the market bottom out made fortunes in the market. Those that sat there, did absolutely nothing, let the market plummet, let all their stocks go to zero, had to wait, 8 years for the market just to get back to break even. That's not good money management. So my recommendation is when the markets get as volatile as they are and there's that much risk in the market, get out, sit on the sidelines. You don't have any profits in the market anyway, so you're not going to have any major tax situations. You're not going to be showing profits at this point in 95% of the cases. So if you're going to want to stay in stocks, be prepared for this tremendous volatility where the market could fall substantially and you could end up basically with a repeat of 2008 and having to wait 7-8 years just to get that back to break even. That makes absolutely no sense. My suggestion is either get out of the Dow totally, because in most cases, most listeners to the show have no right to be in that market anyways. It is not a safe market. It's totally speculative. It's like a gambling casino, and the fact is that I don't buy into the fact that your financial analyst will tell you that the market is cyclical and it's always going to come back. That's a bunch of bull. That is the worst way to possibly trade your money. If the risk is high, get out and sit on the sidelines. That's a smart thing to do. In the 35 years that I've traded this market, that's something that I've always adhered to. The other situation, the U.S. dollar. With all that's going on, the U.S. dollar is still trading at 97 cents. There is no doubt in my mind, no doubt at all, that the U.S. dollar is going to break par again soon and go to 108 to 110. That's why I'm saying the gold's going to drop short term to 1,000 just based on what the U.S. dollar is going to do. Now, I was concerned that gold could have dropped to 850. But the fact is there is now a fear factor built into the price of gold that I think will stop the market at right around $1,000, and we were very close to that a few weeks ago anyway, so I'm comfortable with that number. The oil market. I believe that all these OPEC members are a bunch of liars. They're not going to adhere to what they say they're going to do. That means there's going to be cheating all over the place. And as soon as one cheats, all the other countries are going to cheat. And that's why I'm saying that oil is going to $20. Right now it's at $29.37. Earlier this week it was at $33. Last week it was down to $25. That's how volatile the crude oil market is. My suggestion is the market's going to fall. There's nothing in the world that you can do about it. The unfortunate thing is the Canadian dollar is going to fall with it. I've been saying all along that the Canadian dollar is going to go to 60 cents. We've hit a low of 68 cents so far, so we're getting close. And then this week when oil rallied, the Canadian dollar came back up. So you can see the direct correlation between the Canadian dollar and oil, just like you can see the direct correlation between the U.S. dollar and gold. Except the U.S. dollar and gold work in opposite fashions, and the Canadian dollar and crude work exactly the same. When crude falls, so does the Canadian dollar. So again, if there's oil being sold in the Middle East at $20 or right around there, 20 to 22, it only makes sense that we could see oil touch that price. And again, if the market is turning bearish again because Iran, Russia, and Saudi Arabia are not together on this thing, then again, we're going to see a very, very volatile market. So, with all this going on, what in the world do you do? The fact is that there's two ways to look at investing. One of them is capital preservation, just keeping your money, not losing it. And in today's marketplace, that's paramount. It's one of the most important things you could do. The other thing is capital appreciation. The only way that you're going to see capital appreciation in these markets right now is to speculate. And if you're a great trader and you know what you're doing, then go for it. But if you don't know what you're doing, stay out of these markets because you're going to lose your shirt. There's no doubt about it that if If you don't know how to trade, especially leverage futures or options, you're going to get killed. Now, on the other hand, I've been taking care of my Canadian clients, and I'm Canadian myself, for a long time now. And I've got some private investments that deal in certain investments that my company makes, and I've allowed my Canadian clients to invest with me. And we're doing tremendously well. In some cases, we're making 25% a year or more with huge potential. So if you want to hear about that, give me a call, and I'll explain to you what we're doing. Now, this is not trading paper. This is not trading stocks. This is not buying physical diamonds. It's not buying physical gold. It's dealing directly in my business, which is extremely profitable. So again, my clients are showing huge returns, and we are not risk. We do not take unnecessary risks. And again, if you're not making this type of return, you need to give us a call. I'll explain to you what we're doing. I'd love to get my Canadian clients out of the doldrums, get out of these horrible financial situations that you're facing at this point, and let's get back on track to number one, stabilizing your investments, and number two, making you money again, because it's extremely depressing when every day you look at the markets and these markets are taking your money away. So, Randy, we've got some great things going on at this point, and again, I would love to share them with our Canadian listeners to the radio show and our clients.
The call is free, and when you speak with Harold, it's confidential. 1-800-432-1022. The call is free. Anything that you tell Harold, 100% confidential. RareColoredDiamonds.com is Harold's website. RareColoredDiamonds.com. Telephone number 1-800-432-1022. 1-800-432-1022. Our featured diamond of the week from RareColoredDiamonds.com. Go to RareColoredDiamonds.com, click on Featured Diamond of the Week. It's a 1.19 carat cushion cut, fancy, vivid, orange, yellow, internally flawless. And Harold was telling me before the show, Randy, this is the rarest of the rare. And we'll talk more about that diamond in the second half of the show. Now, Harold was talking about staying out of the stock market, and I hadn't planned on talking about this story. I was going to mention another one, but when Harold was talking about the perils of the stock market, I think this really illustrates in dramatic fashion how bad things are right now. Morgan Stanley's top equity strategist says clients should have done the opposite of what he recommended. Morgan Stanley's Adam Parker still isn't sure what's going on in the market. So here's a guy, he's being honest. Parker, blunt, honest, something you don't really get out of Wall Street normally. Coming into 2016, he basically told clients that he was not sure what was going to happen to the stock market, which is probably something a lot of people who have to forecast think most would not say. And he says, are we on a cube-shaped planet? Should we, do the opposite of everybody else? Everything seems backwards. Sell winners, buy losers, own staples in both up and down markets. Just do the opposite of what makes sense. A bizarro world, but Morgan Stanley's top equity strategist, Adam Parker, coming out and saying that clients should have done the opposite of what they recommended. Yes, that's how crazy things are in the financial markets as we speak. Get our free weekly newsletter. It's the companion to our radio show. You can get it by connecting with Harold at RareColoredDiamonds.com. RareColoredDiamonds.com, 1-800-432-1022. You'll be on the exact same page Harold and I are on. You'll see the articles, the stories that we're reading from all the different mainstream information sources. We'll send it out to you free of charge via email every week. RareColoredDiamonds.com, 1-800-432-1022. One of the other top stories, Jim Rogers, billionaire, hedge fund manager. Central banks don't have a clue. That, according to Jim Rogers, he is warning that financial Armageddon is just around the corner, and it's being fueled by moronic central bankers. We're all going to pay a horrible price for the incompetence of these central bankers, says Jim Rogers when he spoke with CNN Money. We've got a bunch of academics and bureaucrats who don't have a clue what they're doing. The Singapore-based American investor says central bankers are doing everything they can to prop up financial markets, but it's all for naught. He predicts their unconventional monetary strategies will lead to a stock market rally in the near future, but deep trouble later this year and into 2017. This is going to be a disaster in the end, he said. You should be worried and you should be prepared. Central bankers around the world have been increasingly using negative interest rates to prop up inflation and support their economies. But Roger says the moves aren't working. He says they are simply trying to rescue stock markets and help brokers. I love this line, help brokers keep their Lamborghinis. The mistake that they're making, they've got to let the market sort themselves out, he said. It's been over 7 years since we've had a decent correction in the American stock market. That's not normal. Markets are supposed to correct. We're supposed to have economic slowdowns. That's the way the world has always worked. But these guys think they're smarter than the market. They're not. Jim Rogers coming out and very, very concerned, predicting financial Armageddon. But Harold, what a line. Rescuing stock markets and helping brokers keep their Lamborghinis. We have about 2 minutes left in our first segment here.
Well, that's why everybody, if you're being amused watching the U.S. presidential elections, which is a joke, this is the worst year ever for presidential elections. But the fact is that that's what everybody's laughing about, what's happening here in the United States, and they hate what's happening on Wall Street. The fact is that Wall Street is the most illegal operation ever in the history of the United States. But the fact is that it's such a protected industry, and the insiders, the guys that really control the markets, are making fortunes. Brokers are making a lot of money again. But the fact is that nobody that invests in the market is making any money. That's where the problem is. So again, that's a hilarious statement, Randy, but so true. And the fact is that if you're watching the elections, you know that everybody is talking how illegal everything has been on Wall Street.
Well, and then we had the story before Jim Rogers where do the opposite of what I suggested. Yes. Literally unbelievable. Our featured diamond this week from rarecoloreddiamonds.com. This is why we advocate having hard assets in your portfolio at all times. They have stood the test of time. Diamonds, gold, silver. Speak with Harold Siegel about investing in hard assets. We have from rarecoloreddiamonds.com our featured diamond of the week, a 1.19 carat cushion cut, fancy, vivid orange, yellow internally flawless. See it at rarecoloreddiamonds.com, featured diamond of the week. And if you would like to get the stories we're talking about, to get our free weekly newsletter from Harold, we'll send it out to you via email free of charge every week. rarecoloreddiamonds.com, 1-800-432-1022. And Harold made that very generous offer earlier in the show. If you would like to talk with him personally and privately about your financial situation, find out in these crazy times what to do financially and what's happening geopolitically, Harold will be happy to do that. We're going to come back and talk about diamonds. As the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on February 19th, 2016. Our time is 9:05 Mountain. Don't forget, if you ever miss a radio show, they are archived on Harold's two websites, HESradio.com and rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. You will find us there. We're portable. We go on your portable device anywhere you do. And as Harold mentioned in the first half of the show, we're in a crazy time where it's so important to protect the money that you have. And as crazy as it sounds, profit is almost a secondary concern at this point, because you really need to protect the money that you have due to what's happening in the world, obviously economically and geopolitically. And we have a great quote sort of going to that effect from, and this is actually from Egon von Greyer's. Egon von Greyer's, very well known when it comes to investing in hard assets. He says, "We are now entering a very dangerous phase of the coming crisis. Confidence is quickly evaporating and fear replacing it. We know that the world economy is resting on a foundation of debt and false government promises. The world is starting to realize that most of this debt is worthless and that governments' empty promises add up to nothing. There are so many black holes in the world now that any morning we can wake up to find that a bank or sovereign state has disappeared into one of these black holes. Yes, governments will create more negative interest rates and print unlimited amounts of money, but to no avail. The process of assets imploding could happen very quickly and unexpectedly, but whether it happens in a matter of months or it takes up to 5 years, the world will look very different at the end of the coming calamities. The lucky few who can afford some hard assets, physical gold, will weather the storm better financially, but no one will escape the suffering that will hit the world in the coming years." That according to Egon von Greyer's. And Harold, we have a featured diamond from rarecoloreddiamonds.com. It's a 1.19 carat cushion cut, fancy vivid orange, yellow, internally flawless. We believe hard assets in times of great chaos, as we're sort of seeing in the financial markets and geopolitically, are so important, along with gold and silver. And I think Egon von Greyer says it well. We need to definitely have an insurance policy within your portfolio, and that is hard assets.
You bet. Probably never more important than it is now to be in the alternative asset market, hard assets. Alternative assets meaning things that are not stock and paper related, bonds and stock related. So, and there's many investments that fit that, but the fact is that diamonds, certain diamonds, have done tremendously well. And you don't put all of your money into one investment, but the fact is that when we spoke earlier in the show, we talked about two major things, especially that are important right now because the markets are so volatile, is number one, capital preservation. Investing is something that's not going to decline and lose all your money for you, and then it's capital preservation. And the best asset for that, especially at this particular time, is rare colored diamonds. Because the fact is that a diamond like today's featured diamond, a 1.19 carat cushion cut, fancy vivid orange yellow flawless diamond, is pretty well a one of a kind. So the fact is that asset would never ever decline in value, never go down in value. So that takes care of the first part, which is investing in something that you're not going to lose your money, capital preservation. And diamonds are perfect for that. But then we want to make some money. And capital preservation is equally as important, and that's something that diamonds will do also. But they do it over a longer term. It's not like a stock or a commodity where you can look on your screen and see that, oh, my diamond went up, $300 this month type of thing. It doesn't do that. The fact is that the longer you hold this asset, the more and more valuable it becomes. And the way that they're sold is primarily through auction. And that's how these diamonds, that's how you truly find the value of these diamonds. So what we did when we were getting heavily into the diamond business, we built a secondary market to resell our clients' diamonds down the road. So we built a company called 8 Seagull Fine Auctions, and it's the only company of its kind. It's a live virtual auction site. And we've held several auctions, and they've been very successful. We haven't held an auction for the last year, and we are going to start to hold auctions again coming up in the next couple months. The reason that we haven't held auctions over the last few months is, number one, because the Canadian economy has, and the Canadian dollar has dropped so severely. But the major reason is that when we first started doing auctions 2 years ago, we found that 80% of our clients would attend our auctions using their home computers. But now that we've done surveys, we find that 80% of the people that would attend our auctions would attend on their iPhone. So we had to change our technology, and that took a little while. It should be done by March, and we're extremely excited because our company is the only virtual live auction that you could attend from anywhere in the world. In fact, you can download our app, HES Fine Auctions, on the App Store. And we're one of the only companies that has that. So you're going to be able to attend our auctions coming up this year. And by the way, the auctions are not only going to be diamond related. We've made some tremendous inroads and tremendous relationships in the rare car business, in the classic car business. And we are going to hold some auctions this year that absolutely defy description. And it's going to be to a tremendous benefit to our clients. So we're very, very excited about this. But looking at the world of investments today, and how volatile everything is, and how hard we work, especially as Canadians, that work and try to save our money. But the fact is that you pay such a large amount in taxes in Canada, and then the Canadian dollar is sinking, then the oil market is dropping, and it's killing the economy, and it's knocking a lot of people out of business and out of work, so the unemployment numbers are high. It's a horrible situation. But the fact is that if you sit there and do absolutely nothing, it's just going to get worse and worse and worse. You've got to be proactive. You've got to do something to get out of these doldrums, because if you continue to deal like this, your life is going to become depressing. You know, you show up to work every day, but the fact is that the economy is going so poorly that it's very difficult for most people to make money. And then when the oil business is not making money, then people are cut off and let go, and that's when the economy gets even worse. What we've done is we have investments that are within our private business. So they're not paper-related. They're alternative assets, assets that are outside of the mainstream investments. And by the way, mainstream investments are doing horrible right now. My clients are making over 25% return. So if you're not doing well, if what I've just stated to you is you in a nutshell, you know, business is bad, unemployment is right around the corner, the economy is terrible, the real estate market is sinking, the oil market is dropping, as is the Canadian dollar. You need to do something about that now. And you need to speak to me about it, because I've got 35 years experience in this business and I can help you. And if I can't help you, I would never ever hurt you. So, again, at this point here, look at the featured diamond. It's a 1.19 carat. So, first of all, it's over a carat, which makes it a nice-sized diamond. Number two, the cut of it. It's a cushion cut with the rounded sides, so it makes it look like it's over 2 carats. It makes it look like it's, a much larger diamond. Number three, the clarity. It's perfect. It's internally flawless. You cannot get better than that. And then the color is so ridiculously rare. I mean, vivid is the highest color saturation that you can get, and any diamond that is vivid in color is worth more than almost any other diamond. That's number one. But this is not only vivid, it's vivid orange yellow, not orange yellow or yellow orange. It's orange, yellow, vivid, internally flawless, cushion cut. This is a one-of-a-kind diamond and will never, ever decline in value. So the fact is that if you put diamonds away for your future, there are diamonds that you need to put away for a long period of time in order to make the type of returns that you want to make. You know, a yellow flawless diamond, for example, it's got to be a yellow, fancy intense, or fancy vivid, and it's got to be flawless, but they go up by at least 15% a year. You can't make 15% a year on almost any investment today. But the fact is that you want to hold on to it for a long period of time. I've mentioned this many, many times. My wife's girlfriend inherited a 5-carat pink diamond from her grandmother. Her grandmother bought it 50 years ago for $50,000, and today that diamond is worth $5 million. So the longer you hold on to these very, very rare diamonds, the more and more and more they go up. You know, I buy diamonds as investments for myself and for my business and for my clients, but I also buy them for my children and grandchildren. All of my grandchildren own diamonds that are put away for their future. They don't know it, but it's put away for their future. When they get to be around 28 years old and they're ready to get out into the world, diamonds that I bought for them 28 years earlier are going to be worth a fortune. I bought them no stocks, no bonds, no cash, no nothing like that. I've only bought them diamonds to put away for the future because that's where my confidence level is. Anything else could decline in value, and that's not what a long-term investment is supposed to do. The best example I can give you of that is your retirement savings plans. Most of you have been in your retirement savings plans for over a decade, and if you look at the returns, they're either minuscule or nothing at all, or you've lost money. That's not a good long-term investment. You're much better off putting a diamond away for 10 or 20 or 30 years than you are owning stocks and mutual funds to put away for retirement. So, again, Randy, as far as I'm concerned, a rare colored diamond of good quality, and it doesn't have to be a multi-million-dollar diamond. It could be a $20, $40, $50, $100,000 diamond. It will do exactly what you need to do in today's marketplace. You'll not lose your money on them, and over the longer term, it will go up more than almost any other investment, and that's what I look at when making a good, safe, long-term investment.
RareColoredDiamonds.com is Harold's website, RareColoredDiamonds.com. And if you'd like to speak with Harold personally and privately, 1-800-432-1022. Our featured diamond of the week is a 1.19 carat cushion cut, fancy, vivid, orange, yellow, internally flawless. See it at RareColoredDiamonds.com, featured diamond of the week. Last week, in our free weekly newsletter, we had a lot of information on negative interest rates. We've talked a lot about the cashless society. Harold is putting together a seminar that we will be able to view online about the cashless society that is going to be coming our way. To give you an idea of some of the material that we have in our newsletter this week, and this is why you want to invest in hard assets like diamonds. Negative interest rates, negative central bank interest rates now herald new danger for the world. Sub-zero rates are becoming the new abnormal in a shaky world economy. With fresh panic hitting markets, are we finally hitting the limits of what monetary policy can achieve? That's one story. Also, weapons of mass destruction are creating havoc in the financial markets. The solution may be the problem. That's why Wall Street's emerging consensus on negative interest rates, which have been implemented around the world in a bid to basically be a catalyst for economic growth. In all, 489 million people are living in countries with official policies of negative interest rates, according to Bank of America Merrill Lynch strategist Michael Harnett. And they're very concerned about it. Deutsche Bank strategists plead with central bankers, don't go negative, pleads a Deutsche Bank U.S. equities research report stating in strong, if not unusually blunt terms, that central planners are making a serious mistake. Negative interest rates will result in an escalating currency war that will usher in economic, mutual assured destruction, evoking a horrific nuclear or chemical specter. The WMD are negative interest rates, U.S. equity strategists are saying in a report from February 14, that from Deutsche Bank. ZIRP, and that is zero interest rates, and NIRP, negative, have created financial hell. The fundamental premise of global banking, the policy is simple. Whatever is broken in the economy can be fixed with zero interest rates. And one other story, Austrians need a constitutional right to pay in cash. That according to one deputy economic minister who believes that we need to, in Austria, they're talking about preserving the citizens' right to continue to pay in cash and move away from a cashless society. And one story that I wanted to get to, Harold, and this relates once again back to diamonds, and it's from Mark Faber, a quote from Mark Faber, and he's talking about cashless society, negative interest rates, cashless society. He says, let's say you and I live in a small town of 1,000 people, and suddenly the government says, no more cash. Say I'm the baker and you're the butcher, and a friend of ours is the pharmacist. We can then barter among each other and affect the balances every month or every 3 months and so forth. Then some kind of paper money comes back up. These are vouchers. So the war on cash would have the exact opposite effect. You will have a voucher system in every small city, and even in big cities, some smart people will develop the voucher system. So instead of having just one currency, paper currency, you'll have hundreds of paper currencies. Number two, if they want to really launch a cashless society, they would have to take away our gold. That in some countries would simply not fly. In other countries, a cashless society is simply not practical because 80% of the population doesn't have a bank account and doesn't have cash to start with. So in my view, the cashless society business is going to fail very badly. The argument is, of course, we want to move into a cashless society because we want to prevent criminality. This is all nonsense. They want to move into a cashless society so they can control you. And Harold, we believe that's where hard assets come into play as well. It's important to have personal private wealth like hard assets, gold, silver, diamonds, as we see negative interest rates and we see the onset in some countries. We're having talk about a cashless society.
It's quite scary. The more work I do on this cashless society, the more concerned I am. Because, again, everything points towards total control for the government over every single thing that we do. Yes, they look at it like it's going to, by having a cashless society, it's going to bring all of the drug money out of the coffers type of thing, and counterfeit money. Eventually, people are going to have to get this cash that's sitting there, and there's trillions of it. They're going to have to get it back into the system or lose it. And I can assure you that as soon as you start putting money into the bank on a daily basis, the next time you show up, Revenue Canada, IRS, or Homeland Security is going to want to know where you got this cash from. So, again, the closer we get to the cashless society, the more frightening the implications. The fact is that I'm putting this seminar together, but there's so much work and so much digging to find out what the true problems are going to be from this cashless society, that we want to make certain that when we do present it, that it's presented in the proper fashion. So it's probably going to be about 2 months away, but you're going to be able to watch it virtually. You're going to be able to watch it from home on your computer, your iPad, or your iPhone. And again, this is the new technology that we're also developing for our auctions, which is the same as our seminar technology. So again, things are changing so quickly. This cashless society is a frightening thing, but it is so much closer than most people think, and that's why we're going to be doing our seminar. It should be ready in about 2 months.
Featured Diamond of the Week. See it at rarecoloreddiamonds.com. 1.19 carat, cushion cut, fancy, vivid, orange, yellow, internally flawless. This diamond is the rarest of the rare. Featured Diamond of the Week from rarecoloreddiamonds.com. Call Harold, 1-800-432-1022, or connect with him at rarecoloreddiamonds.com. On the diamond front, diamond news this week, a diamond weighing, and this is a white diamond, 404 carats, is one of the largest ever found. It was found in Angola, and they think at this point that it could be worth about $20 million. The world record is 3,106, and that is carats. The gem, called the Cullinan, it weighed a massive 1.3 pounds and was discovered in South Africa in 1905. Now, as well, the Bank of America came out and said that millennials waiting to get married is good news for the diamond business. Millennials are getting married later in life, and that means they're buying engagement rings later in life. And that also is a positive because they have more money to spend. One other story we have in our free weekly newsletter on diamonds, a photographer got an exclusive look at Elizabeth Taylor's home clothing and jewelry before she passed, and took a picture of the Bulgari diamond ring that sold for close to $1 million. You can take a tour of Liz Taylor and her diamond collection in our free weekly newsletter. Connect with Harold, 1-800-432-1022, rarecoloreddiamonds.com. But Harold, you touched on it, our featured diamond of the week, 1.19 carat, cushion cut, fancy, vivid, orange, yellow, internally flawless. To get something like that, it's nature's art. It's Picasso, except it's Mother Nature. Vivid, orange, yellow. Harold, it's the rarest of the rare and very difficult to find in the environment that we're living in today.
You better believe it. These are amongst the best investments that you could make at this time and put away for your future. Again, it's so important to hold on to your money, to preserve your capital and not lose your money in the markets. And the unfortunate thing is, if you just sit there and don't do anything, that is definitely going to happen because it's happening right in front of you right now. So you need to be smart about this, and you need to be proactive and get out of the risky investments that you're in and get into the right investments, and we'll help you with that. Again, all you need to do is give me a call, and I'll spend as much time with you as you need in order to help you understand what your potential is, what investments you have that are not working for you, and which ones are, and how we can help you. Again, my clients are making over 25% a year with us on private investments that is available to the listeners to this radio show, and we would love for you to participate and get back into the action.
Harold has warned us about China for quite some time. He was interviewed on Bloomberg Television by Deirdre Bolton. Deirdre went over to Fox Business News. Harold was interviewed by her then, and he said he was very concerned. On Fox Business News, he was very concerned about China. And it's interesting, this week we have news coming out. Some super bears are now expecting an imminent collapse of China's banking system and currency. China's banking sector is now so big that if it lost only 10% of its outstanding loans to default, that would be the equivalent of wiping out about 30% of China's annual gross domestic product, according to UBS economist Tao Wang. That scenario would require an immediate bailout of China's banking system, which is now the largest in the world, Wang says. So some super bears are expecting an imminent collapse of China's banking system and currency. And one of the things that we hear about China, they're coming out and saying, oh, we don't have any problems, we don't have any defaults. But because their banking system is so large, they're admitting to no problems, even a small amount of problems that could come down the line. Just naturally, it's going to happen, could create chaos in China. Harold, we have about 3 minutes left in our segment. You've warned us about China for a long time, and that's why, here we are last week doing the show. There was concerns about European banks that sent the market into a tailspin, Credit Suisse and Deutsche Bank, and now people are very concerned about the Chinese banking system.
Well, they should be. And the other thing about China is that they're a communist country. So the fact is, a lot of the news that we get out of China is not not accurate. We have to really dig for it. So the fact is that China made a lot of bad moves. One of them was in real estate. All you have to do is Google Chinese real estate ghost cities. They misinterpreted the marketplace, and they built these magnificent cities, several of them, that are totally vacant right now. The condos are there, the shops are there, the whole system is there, the whole infrastructure is there, except for the people. Nobody lives in these places. When you make a mistake like that, when you make an error like that, you know that you've totally misconstrued your entire economy. And that was the start of it. And the banking system has got to crumble, because the fact is that most of the things that they're doing are illegal. They are manipulating their own financial markets and their own currency, and eventually that's going to jump up and hurt you. You're talking about the world's second largest economy that's in huge trouble. So, again, expect a lot more troubles coming from China. Stay in your gold. If you own physical gold, own it. If you're waiting to buy it, I believe it's going to come a little bit lower, and then we're going to buy it, but we do believe the gold is going to skyrocket again. Diamonds are one of the best investments you can make right now because they don't lose their value, and they increase in value. Again, don't speculate, stay out of anything leveraged, and don't finance your gold and silver.
Definitely get our free weekly newsletter this week from Harold, rarecoloreddiamonds.com. 1-800-432-1022. Jim Rogers, we touched on this. Central bankers don't have a clue. Interviewed by CNN. He's warning that financial Armageddon is just around the corner, and it's fueled by moronic central bankers. And if you want a reason not to be in the stock market, Morgan Stanley's top equity strategist says clients should have done the opposite of what he recommended. And these people are the experts. And if the experts on Wall Street are not getting it right and admitting later, which we appreciate, that people should have done the opposite of what was recommended, to me, that is a massive warning sign. Harold, thank you for another outstanding show and your knowledge.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.